Markets in the United States have taken another hit. Investors saw another steep slide on Wall Street. US stocks and the dollar plunged again on Monday as President Trump intensified his attacks on America's central bank boss, Jerome Powell. In a post on social media, he called him, quote, a major loser for not lowering interest rates and called on Mr. Powell to make preemptive cuts to help boost the economy. He said that the Fed had been consistently too slow to respond to economic developments. Well, the president's comments sent Wall Street sharply lower, with all three major indices down over 2%. Gold, which is the traditional safe haven in a time of uncertainty, has hit another record high. It's above $3,500. Well, we're also seeing some movement on global currency markets too. The British pound and the Japanese yen jumping to their highest level against the US dollar since September last year. Well, let's make some sense of all this with Jeremy Stretch, Chief International Strategist at CIBC Capital Markets. Jeremy, good to have you here. And do exactly that, if you will. What is going on here? Because markets unsure of a direction over recent weeks, and then once again further attacks on the head of America's independent central bank doesn't paint a picture of an economy that's pretty rosy right now.
Oh, no, that's right. And you hit the nail on the head there when you're talking about independence, because, of course, that's been one of the central benchmarks which has really underlined why international investors over decades have invested very heavily in terms of US assets, and particularly US treasuries, because of the independence of the central bank as the baseline for monetary policy. And that issue, or that bastion of independence, is now being threatened by Mr. Trump. And of course, as you've mentioned, the IMF will be downgrading their global growth prospects this afternoon because of the influence on the impact of the tariff regime. So there is a real question mark regarding international investment flows going into the dollar. And in a sense, what we're seeing is international investors are deciding to keep more capital in terms of their own domestic markets. That includes the Eurozone, it includes Japan, and to an extent also includes the UK. So that is seeing investors moving away from the US dollar and into alternative currencies, and then also seeing that sort of safe haven bid added to the dollar as well.
Yes, and as we said there, the pound and the yen jumping to their highest level against the dollar since, I think, September. Is that about US dollar weakness or the strength of the pound and the yen?
I think it's definitely a story of US dollar weakness. So we've seen international investors very much averse to holding dollars amidst this uncertainty, which is really writ large, emanating from the US. I think in terms of Japan, it's very much the case that Japanese investors are keeping more money onshore. So I think there is this sort of issue regarding concerns in terms of investing in US assets. I think in terms of the UK, I think it's interesting that obviously we have seen a slight uptick in terms of some of the economic mood music over the course of the last few weeks, despite the